Look at that. You clicked on one of my videos on a Saturday afternoon. You, unlike financial analysts, do not have a small brain. You want to know, is the rally going to continue? What are the biggest catalysts that is going on? What is going on with the liquidity crunch? What's the put to call ratio? What's the likelihood of seeing a recession? What is about to happen in the markets? Is this the time to YOLO all of your money on short-term call options? Is it the time to sell stocks? Look forward to the AMC and GameStop moasses? Is it time to buy puts? That's what we're going to talk about here in this video, because like I said, you are not a small brain financial analyst and you want all of the nitty gritty details that make all of the difference. So that is what we are going to do here in this video. If that sounds like something you guys want to be a part of each and every single day, then you most definitely want to hit the subscribe button as well as hit the like button to help push this video out to as many people as possible. And I don't know about you guys, but I like to spread the wealth and spread the knowledge, so we can do that just by hitting the like button. So I do appreciate that. And if you guys want to come trade with us, you like the information that was provided to you, you want to come ask questions, learn, get in on these trades as soon as I or somebody else in the trading community post their trades, then come check us out. Come join us, link down below in the pinned comment. Enough of that, let's get to it. The first thing to point out here is that the stock market just had its best 2 weeks since late 2020. If you guys have not noticed, there you have it. We seen the rally that I predicted after the Fed. Literally, as soon as the Fed stopped talking, the market started to rally, and they have not looked back ever since. Now, even though I expected this rally, I did not expect this rally to last this long and go this high. I mean, we have taken off faster than me leaving the couch when food is done on Thanksgiving. It's been a rocket ship to the moon. Is this going to last? Well, to think about that and really try to come to an informational opinion here, because we're not just going to throw out, hey, we think the market's going to go up. No, you got to have some kind of evidence behind that, some kind of logical thinking. And that's what I want to provide to you guys right now. So essentially, the market's rallied. And I hope you guys understand this by now, or if you don't watch my channel, you definitely want to subscribe, because you already know this if you guys watch the channel. So I don't want to stick on, on what has happened, what has caused this rally. It's pretty straightforward. And that was my whole logic going back the last couple of weeks, that the markets were pricing in too much bad news from the Fed. Even though we got pretty bad news, it wasn't anything out of line that the markets were not already expecting. So we got what we were expecting. What do you do from there? You start to cover on some of your short positions. You start to buy back some of the stocks that you sold in fear of what the Fed might potentially do. That's the bottom line to it. Nothing else has changed. Actually, the situation has gotten much worse since the Fed meeting. I wish I could sit here and say to you guys, the situation is better now than it was even 2 weeks ago. That's not the case. You have nuclear war talks over here. You have mortgage rates going crazy, up 0.5% in the last week. Now the average mortgage rate is at 5%. You have the Fed talking about doing a double rate hike in May and another one later in the year. You have inflation that is still rampant. We are heading towards stagflationary environment. That is stagnating growth and high inflation. That's where the Fed has to come and set the economy into a recession that could potentially last years. That's your 1970s playing over again. A recession that lasts years. But what are the markets doing? They are rallying. Why are the markets rallying? That's the key that I want to be very honest with you guys on. There's a lot of things that are moving around and constantly evolving. And what some people fail to realize, even financial analysts, that the market is a forward-looking instrument. The markets don't even give a shit about what I just told you, why the markets rallied to begin with. They're looking ahead. The markets right now are starting to price in a war in Ukraine coming to an end, or at least sometime here in the near term future. That's a slight reason why. On the other hand, you had a lot of shorting activity that was going on. How do we know that? Well, I'm glad you asked. If you come to CBOE, that's the Chicago Board of Exchange for Option Trading, you go to March 8th, which was one of many lows we've seen in the markets. That was a real day of capitulation. It's also a day that we bounced back pretty hard, but you can see right here for index options, for exchange traded products, there was many more puts compared to calls. About 300,000 more puts comparatively to calls, with the puts sitting at about 1.239 million, the calls sitting at less than 1 million. But if we take a look at something like today for equity options, you are seeing 1.8 million calls that are going through, 900,000 puts that are going through. So a lot of this rally is really people that are de-risking their, going risky in their portfolios, that are starting to buy calls, that are starting to de-hedge some of their short positions, maybe sell out of some of those puts. So that is really helping to fuel this rally. But go back to what I just said. The markets are starting to price in some form of good news, some form of conclusion to the Russia and Ukraine conflict. And you guys can see just in the market's reaction here, this is a huge move from going from $413 on the SPY, the S&P 500 ETF, to $453 at the peak that was here in after hours. That's ridiculous. That's a wild rally. So it's pricing in a lot of good news. So when that good news inevitably does come, it might be like the opposite of what happened during Fed Jerome Powell's meeting. Markets were pricing in too much bad news. The markets, realize, hey, it's not as bad as we thought. Markets rally. Well, it can work to the opposite as well. If that does finally come out, we actually get some positive news that might already be priced into the markets. And that's the real concern that I have with this rally, is that nothing has really changed. It's only gotten worse. So when you finally get that good news, it's already priced into the markets. Look at what the markets have done. Unless we get inflation coming down, a Fed that is at least not talking about, 9 or 10 rate hikes in a year like they are right now, if you see the war in Ukraine ending, also the stocks that control the markets like Microsoft, Amazon, Google, Apple, that can beat out their 2021 revenue numbers, really coming here in the next month or two when earnings start, that's when you can see all-time highs. But really all of those things have to happen, or at least a vast majority of them. If the uncertainties go away in the markets, but earnings are going through the floor because, hey, you're not getting $600 a week in a bonus check, plus your average salary, or 75% of your average salary through unemployment benefits. You're not seeing stimulus checks every other month, child tax credits, and you don't have money to spend. But granted, if the companies, like I just mentioned, can pull those numbers off, it will be very good. I find that very hard to believe, though. I personally don't think that's going to happen, and I think investors are going to get a very rude awakening once they realize that cannot happen. But there's also, like I said, the case to be made here that revenue goes up a little bit and things go back to somewhat normalcy, right? The war in Ukraine ends, supply chains get better, inflation goes down, the Fed is aggressive, but they don't have to be as aggressive, and earnings do well. It could be really good. I don't want to be the guy that says, hey, the markets are doomed here. But after this rally, my personal opinion, not the time to be buying a bunch of weekly calls expecting this rally to continue. That's my personal thoughts here. I think we are in a bear market, and this is a bear market rally. They can last days, they can last weeks, they can be very violent due to shorts covering, but inevitably you will come down lower than where we started this bear market rally. At the same time, a lot of other very interesting things are going on in the markets. Take a look at the 2 to 10 year treasury yields. This is really the spread between them. Think about it like this. If you lended out your money, would you expect to get paid more if you lended your money out for 2 years or 10 years? obviously 10 years. If you're lending out $1 million, you want to get paid more in 10 years than in 2 years. Well, when the yield curve inverts, that's when the 2-year bond pays you more than the 10-year bond. Not supposed to happen, and it predicts a recession every single time it goes under this black line. Even back here, August 19th, and I believe there was a couple days we went under there, but definitely for August 19th, I can see right here. Let's just pull it up to be more precise with it. Yeah, really August 19th through the end of August, the yield curve was inverted. What happened a couple months later? Well, you had COVID. Now, there's some arguments there if people knew this was going to happen or what the real reasoning is to that, but it still happened. And like you can see over the max history, every time we went under this black line, there has been a recession. Every single time, whether it is 2 months before or 2 years before, it always happens every single time. And what is going on right now? Well, the yield curve is flattening, and it's been going down for a while now. Really, since October of 2021, it's been a consecutive move to the downside. And you guys can see it's basically fallen off of a cliff, and we're heading straight to the ground. We're only at 0.18, so if that spread really starts to get worse comparatively, this was August 2005, the spread was 0.18. Not too long later, about 3 months later, the yield curve inverted. So I think that's going to be another big fear catalyst that will come to the markets. If the yield curve inverts, expect the stock market to take a move downwards. You are also getting some very interesting news coming out of Russia about Ukraine. They're basically saying that they are shifting their focus away from Kyiv and towards eastern Ukraine, saying that they want to just take the Donbass and Luhansk regions, these regions right here, carve those out and control those. Yet fighting is still going on other places as well. So there's a lot of talk about, hey, this could potentially mean things could come to an end in Russia and Ukraine. Likely why the markets have been rallying. Keep in mind, people with billions of dollars know things far before you do. That's why, like you can see, like I've called out many times, the treasury yields were actually dropping way before 2020. Way before 2020. People were rushing into safety assets. A lot of signals were there for the COVID outbreak, but nobody knew about them, or they claimed they didn't know about them, right? So it's getting pretty obvious to me here. There is good catalysts. There is a lot of bad catalysts, but I think at this point, the good outweighs, the bad outweighs the good here in the short term, but it really comes down to fundamental valuation as well. If companies can maintain their fundamental valuation and keep growing revenue numbers, especially the large companies like Apple, Amazon, Google, Microsoft, Tesla, the ones that control the markets, if they do well, markets do well, indexes do well. If they don't, you'll likely see that this is the year of the stock picker. This is the year where individual stocks will do better than the index. A lot of people have talked about that already. I'm not the first person to say that. As far as AMC is concerned, we're heading into a liquidity crunch, and we're going to be going over that at 4 p.m. and take into consideration everything we just talked about in this video. Add that to what we're going to talk about later on today, and you're going to be very, very excited with the outcome. So that's going to be all for this video. Hit that like button and subscribe to the channel if you guys have not already. Also, make sure to get your free stocks. Links down below in the description with Webull, Moomoo, and Public. Well, Moomoo is almost free. For $1, you can get 3 free stocks as well as an additional free share of NEO upon signing up and depositing a singular dollar. Thank you guys for doing that. Come join the trading community if you guys want to be a part of that. Link down below in the pinned comment. That's all. Love and appreciate you guys. Thank you for watching, and I will see you in the next one.